It's 7 past 10. I think we should start with a slight delay. The fourth day of the Circular Week 2025. And it's my pleasure to invite you to Financing a Circular Transition event, an event that is really important in the circular transition in Europe and beyond, as financing is one of the main barriers that we currently see in the circular transition. My name is Hubert Bukowski. I'm a research director at the Novo, the organizer of Circular Week. And it's my great pleasure to introduce my great panelists that we have here with us today. And that's Bartosz Szilczak from Bank Gospodarstwa Krajowego, BGK, Pia Nieminen, Senior Policy Advisor, European Investment Bank, Murat Karaege, Senior Investment Officer and Regional Climate Lead at International Finance Corporation World Bank, Leszek Kąsek, Senior Economist at ING Bank Śląski, and Dominik Benedict, Senior Expert and Product Manager ESG at Erste Asset Management. So we'll definitely have great speakers today. And I hope you feel the same way about sustainable finance as I do. Because our current economic system is based on take, make, waste principle. And it is characterized by little regard of environmental or social outcomes and a persistent focus on short-term monetary results. And having this linear model that we operate in, actually, the financial sector has taken the inherited model that we already have and followed suit. This means that currently the financial sector is broadly interested in linear business endeavors using tools that were developed exactly for take, make, waste economic model instead of the circular one that we are currently pursuing. But I see a great potential in the financial sector to actually influence circular transition. I hope we hear more from our distinguished guests to tell us what they already do, what can be done, what is missing, what are the barriers. So we'll discuss that in a moment. But as for the agenda goes, we start off with the presentations of our distinguished guests, and then we have the discussion. At the end, we'll have still some time for question and answers. And as for the circular transition and financing it, it seems that circular models remain largely underfunded. And this represents a significant untapped potential and missed opportunity to build a more resilient economy and also more resilient financial sector. Less risk for this global crisis that we are facing right now, the climate crisis, the loss of biodiversity, pollution, etc. So currently the potential is untapped. According to Circularity Gap Report Finance that you can find on our colleagues' website, Circular Economy, and which was presented yesterday at the main conference of the Circular Week, European Sustainability Congress. Circular investment represents just 2% of all tracked capital. And it seems that the financial sector is still reluctant to facilitate the circular transition. This may be because of higher perceived risk, longer return of investment, or additional regulatory burden. We will discuss this in a moment. What are the barriers? What are the problems that we are facing in putting actually sustainable finance in as a mainstream instead of a niche as it is right now? So there is no doubt that our economy is in need of a financial product that enables circular transition. However, as long as financial institutions will perceive circular economy financing only as a strategy to, green their endeavors, their activities, to show, answer the growing pressure from the public as well as shareholders to act on climate change and not as a rational economic decision, as a profitable activity for them to actually gain economic value, financing circular businesses, circular models, and the whole circular transition will still be niche. So here we are today to identify steps that lead to circularity financing becoming mainstream. And as I said before, we will have short presentations of our distinguished guests. So we'll hear it from them in a moment. But what I would like to ask our audience is to make sure that you're all right with the whole thing being recorded. You won't be visible, so that's not a problem. But if you will ask a question to our panelists, then be sure to be mindful of that. So, how to actually lead circular financing to becoming mainstream? What are the barriers? What we can do about it? Let's start with Bartosz Silczak, representatives of Bank Gospodarstwa Krajowego, BGK, a Polish public bank that actually, as we've seen yesterday on the main Congress, does lots of things in sustainable financing already. So they have lots of experiences about this. And Bartosz, could you share them with us?
Yes, thank you, Hubert, for this introduction, and good morning to all. And I would like to say that yesterday I talked about a bit various types of financing and the goal that BGK plays in circular transition. Today, I would like to just to share how BGK approaches financing the circular economy and what tools we have developed to support this business, especially for SMEs. Because in order for them to make more sustainable investments. I would like to walk you through our taxonomy-related offer, how we simplify access to financing, and how we are working to embed circularity into the mainstream financial practice. So let me just begin with our dedicated financing program that integrates EU taxonomy criteria. This offer is designed for companies that want to align with the EU taxonomy and transition toward more sustainable operations. It's particularly relevant for businesses planning investments to contribute meaningfully to environment and climate goals. And they are seeking external financing for those investments to happen. Giving you a bit of example how we managed to make this financing or this product, we've identified 31 types of eligible investments. I mean, from probably more than 200 activities listed in EU taxonomy, we've transformed them into investment projects that we would like to finance under this product, which were quite typical for our bank. So we've clearly defined at least one screening criteria, the criteria coming from do not significant harm that was relevant for this investment. That's important here because we have simplified the process. Companies only need to meet this one criteria per investment type. This makes the offer accessible even for businesses that are new to EU taxonomy and are just beginning their sustainability journey. This structure also supports compliance with upcoming EU sustainability reporting obligations. We know that it's probably being on hold right now for next 2 years, but soon it will be extended and will cover also smaller listed SMEs. And the types of the circular economy investments we support include, for example, waste prevention, reuse and recycle for reuse and recycle infrastructure, eco-designed and product life extension solutions, and also remediation and of contaminated sites. So I would like to just emphasize on one point, which is very crucial for this product. if we're going to finance an investment under this product, this doesn't mean that the investment is fully compliant with EU taxonomy. Because like I said, our goal was to raise awareness about taxonomy and to slowly shift the investment into more sustainable approach. That's why we've introduced only one criteria, one of many that are introduced in EU taxonomy. So I know that this can sound a bit complex, but to give you a concrete example, for electricity generation using solar photovoltaic technology, the eligibility criteria is to use high durability components and ensure recyclability at the end of the life. We will require compliance with the ROCs directive, which restricts hazardous substances from those panels. In this case, we will ensure environmental safety and support for circularity by embedding material of reuse and probably restrict pollution of those recycled modules. This way, when we just focus on one of those criteria and defining such clear sector-specific criteria, it makes easier for companies to understand what is expected from them and how it impacts the quality of the investments. It's not for us just ticking the boxes. It's about the creating of real value through sustainable design and responsible production. That's why we have the sustainability in the core of our organization. Beyond individual projects, we see our role as a catalyst for systematic change. Development banks like BGK are in unique position for financial ecosystems. I mean, through initiatives like JICE, which I described yesterday, we would like to help to shift the economic model from linear to more circular. And I probably listed the outcome of the last 5 years, but just to make sure, I would like to say that we have mobilized not only by this offer, but by many other products that national development banks have in offer, almost 16 billion euros, and we will probably deliver this number by the end of this year, in order to support projects, promote resource efficiency, reduce waste, and to bring more sustainable financing into the economy. Just to conclude, our goal at BGK is to make sustainable finance more inclusive, transparent, and scalable. We believe that development banks have the responsibility to lead, not just by offering capital, but also designing and shaping tools and frameworks to make circular investments viable for all. We are proud to progress with the progress that we have made, and we know what more we need to do. That's why we continue to collaborate, for example, within the JICE and awareness programs like this webinar, in order to collaborate with other institutions, simplify access for financing, and support companies in their transition of journeys. So thank you for this opportunity to shortly elaborate on our one of products, and I'm looking forward for the conversation.
Thank you, Bartosz. It was really good. Really nice that you touched upon the barriers that we currently see. One of the barriers being too much red tape and bureaucracy. And you're at BGK try to simplify this, so that's really welcome. I think we will touch upon this topic next in the discussion. But as for now, we have our presentation, and the next one is Pia Nieminen from the European Investment Bank. I will share your presentation.
Thank you, Hubert, and good morning to all. Happy to be here. Good morning from Brussels. I am based in the representation of the European Investment Bank in Brussels, but you may know that our headquarters is in Luxembourg. So I will first present a little bit the bank and then explain what can be financed and how around circular economy, and then about the partnerships and knowledge sharing. So the European Investment Bank is an EU bank, and all the 27 member states, EU member states, are our shareholders, and we support the EU policies and legislation. And we are not only an EU bank, but we are also an EU climate bank, as we adopted already in 2019 our climate bank roadmap, where we committed to finance at least 50% on our financing for climate action and environmental sustainability. European Investment Bank finances mostly inside the EU, so 90% of our financing goes for EU member states, but we also have operations outside the EU, depending. So not 10% of our financing is outside the EU, depending on the mandates which we receive from the European Commission. So mostly in Africa, Latin America, Asia, and then Eastern Partnership countries. What I can say, we are working to develop our circular economy transition and route, and here I wanted to share with you a little bit some numbers. Can we do more? Yes, I would say that we can do more. The last 5 years, we have financed 5.1 billion euros, and I wanted to share with you a little bit the sectors where we have financed circular economy projects. So mostly on industry and services. For example, we have financed iPhone refurbishment company in Finland, for example, waste separation, packaging and packaging waste companies, but also large share is on agriculture and bioeconomy. This can be projects like using alga and turning it to pharmaceuticals or cosmetic products, and then waste management like PET bottles and plastics area, and then urban development and buildings. There we have financed retrofitting of, for example, the buildings and using circular materials in construction sector. And then water is also very going up, these kinds of investments. And there I can mention, for example, a shower company, which is using water savings and then recycling on water, what we have financed. Last year, so 2024, we financed 38 circular economy projects, and this was totaling 1.4 billion euros in total. And I also want to mention that when we finance project, we can only finance 50% normally. So the other 50 needs to come from other sources. So either national budgets or EU budget, or then commercial banks and so on. So how can we make this transition happen? So advisory is very important part of this journey, and then here you can see some of our advisory programs. So I first talk about the role of the cities, which is really important in the transition. We have C3 Circular City Centre initiative, which was built together with the European Commission. There we can really support the cities in their journey in transition to circular, from building up the strategy, then building up the project pipelines, and then supporting thereon. We have also Jaspers. This is an advisory on waste management and circular economy, supporting EU funds and in their project cycle. And then the two other, which are beneath, they are more related to outside EU projects. So Clean Oceans initiatives, really concentrating on plastics in oceans and rivers. There we work together with other European banks from Germany, France, Italy, and Spain, and then switch to circular economy. It's a program on value chains, concentrating really on plastics, textiles, and other practices. For example, in Morocco, Bangladesh, and Egypt. Next slide, please. Alongside advisory, partnerships and knowledge sharing is really key. We cooperate a lot with other banks and financial institutions. And here I want to present to you a report which we draw together with other development banks, multinational development banks. We have been working together, and the EIB has been leading this work. First, we agreed on the shared vision. It was happening in the World Circular Economy Forum back in Helsinki, and then later on last year we produced Circular Economy in Motion, where we present 20 different cases where we can how the multinational development banks can support circular economy. And these multinational development banks, there are Asian Development Bank, African Development Bank, EBRD, Inter-American Bank, and World Bank, and us. And also this report highlights that circular economy projects are gaining ground globally, and not only in the EU, but also globally. And MDBs can provide advisory and finance, and private sector is really active in the area. But this requires regulatory environment to be there, that really looking at the long horizon for projects. Cities drive to action. This is how we see it, and of course the transition needs to be inclusive and just. I think that's from me for now, Hubert, and happy to hand over to other colleagues.
Thank you very much, Pia. It's really nice that you mentioned that you already called yourself a European Union Climate Bank. I think that says something on your commitment to the cause. So we'll talk about it also in a few minutes. And now I would like to invite Murat Karayega to share his perspective on possible circular transition and how to facilitate it with the help of the financial sector.
Thank you. Thank you very much, Hubert. So hi, everyone. Good morning. This is Murat Karayega. I'm working for International Finance Corporation, part of the World Bank Group, based in Warsaw. And as you know, IFC is the private arm of the World Bank Group, investing in private sector as well as subnational governments and municipalities. So today I'll be talking a lot, I would say, about trash, but hopefully in a positive way, about how waste can power our economies, and most importantly, in terms of its environmental benefits of working on the full waste value chain. Hubert, do you mind maybe reflecting our presentation?
Yes, of course. I'll do that.
So maybe in the meantime, I can just start and mention that IFC's work in waste management and circularity, and as part of that, we partner a lot with private and public partners. And this is an area where IFC has built a strong track record over the last 2 decades. And as my colleague from EIB, Pia, mentioned earlier, we have been working a lot together with other MDBs, including EIB, BRD, and other multilateral development banks. If we can move to the next slide, please. So let's start with the global picture. Each year, the world generates 2.2 billion of municipal solid waste, and this is expected to increase more than 70% by 2050. And this number doesn't even include industrial and construction and hazardous waste. So as economies grow and urbanize, the waste volumes will grow faster than the population growth. So the challenge is global, but the opportunity is also global for sustainable management and circularity. Next slide, please. So then why does waste even matter? It's mainly because, as you know, it touches on multiple points of climate, environmental, and social priorities. The uncontrolled waste leads to pollution and greenhouse gas emissions, as we know. And sustainable waste management supports clean, livable cities and resilient economies, as also mentioned in the first presentation of my fellow colleague. So directly contributing to the UN Sustainable Development Goals. So it's not really just about disposal, but it's really about how we can further transform how we use our resources. If we move into the next slide, please. So managing waste requires a fundamental shift. It would require from a linear, take and make and dispose approach to a more circular economy approach, which we are also trying to foster. That means we need to design our systems to reduce and reuse materials, recycle and compost and recover energy, and only as a last resort, dispose of residuals. So that is what we call the waste hierarchy, and it's at the core of IFC's approach also to turn waste into value. So in this slide, you will see our whole chain approach in sustainable waste management. So we support clients in every step. So this could be, as I mentioned, it could be private clients, waste management companies, or it could be public clients like subnational governments or state-owned enterprises as well. So what we are trying to do is to support clients in every step, from collection and sorting to recycling, composting, energy recovery, and safe disposal. So over the past 20 years, we have provided both financing and advisory support to both waste companies and municipalities for bankable solutions. And this is all anchored in the concept of waste to value approach. And we will also give a bit of examples in the later slides. So again, a little bit also emphasizing on the point of full spectrum of waste and the business models. And in terms of also emerging new business models in several areas. In collection and transport, we are seeing more and more efficient vehicle fleets and digital route optimization that the subnational governments are trying to implement in emerging Europe. As IFC in this part of the world, we are active in EU 4 countries in Poland, Croatia, Romania, Bulgaria, as well as Western Balkans, Ukraine, and Caucasus. So just across all the countries, we are seeing the municipal governments are very much aware of the need of waste management and to better improve their systems in terms of efficient vehicle fleets. And then just lately, we have been working with, for example, City of Zagreb in Croatia about financing their vehicles and then converting more of their waste collection vehicles into e-vehicles. So this is an approach we are trying to also implement and replicate in other parts as well. In material recycling, we support sorting facilities and integration into manufacturing, especially that many of, again, our clients are sorting the waste, and those sorted materials are then sold to recycling companies. And the fact that there could be more better integration where the sorting systems can be also modernized, it would also help a lot on the system of efficient, I would say, recycling, so that the car manufacturers and all other manufacturing companies that are expecting the recycled materials would have, I would say, better products and in better prices. So that's something we are also working on. In energy recovery, we have waste to energy projects, like in Belgrade, Vinča waste to energy project. It has been one of the first emerging markets project finance transactions on the waste space, as well as biogas projects. And in disposal, we finance sanitary landfills and landfill gas to energy solutions. And we are also pushing new frontiers, right, in terms of chemical recycling, battery recycling, biomethanol production, linking waste to broader energy and industry transitions. If we can move to the next slide, please. So let me now highlight a few examples from our portfolio, starting with integrated waste management. Averda is a company where we provided a $30 million corporate loan, expands their capacity of recycling and alternative fuel in Oman, Morocco, and South Africa. Eneris is, I think, a company that many of you would know. This is IFC's 80 million euros mezzanine loan to a Polish waste management company, helping the company to expand their recycling infrastructure and make strategic acquisitions in Poland. And Zagreb Holding, as I mentioned, IFC anchored cities 300 million euros of sustainability-linked bonds, supporting the collection tracks and recycling facilities. So these projects show how IFC works with both private operators and city-owned utilities. If we can move to the next slide. Yeah. Again, another example from Poland, Elemental Holding, where we invested in equity to expand metals and e-waste recycling. E-waste is a space where we want to do more, given the importance of its hazardous nature and the impact on the environment. I'm not going to talk more on the rest, but again, you will see these examples from Thailand, and also, you know, from the Greenback example, where a UK firm developing, I would say, high-end technological recycling units and expanding in emerging markets. Belgrade Waste to Energy is, I touched base briefly. This is one of our landmark projects. We started with Suez and Margaret Fund and Itochu. It's really about transforming an open dump into a modern landfill and energy plant. Again, Horizon in Brazil, our sustainability-linked loan is financing their recovery and leachate treatment facilities. Super important for the groundwater, I would say, quality and water supply. And new CWI in China project, again, to expand their landfill gas to energy projects. So beyond financing, this is something we really try to put forward. IFC also provides our advisory and knowledge solutions through our program called Circularity Plus. So within this program, we help clients to explore new business models, expand into new markets, develop revenue streams such as carbon credits or resource recovery, and really offering our tailored advisory, knowledge sharing, and networking. And this work is really free of charge to clients. And the idea is to bring together all clients across all regions from Latin America to Europe to Asia and the Middle East. In terms of our actual cities engagements, so these have been again our global engagement in India, Colombia, South Africa, Kazakhstan, Serbia. So our goal is to help cities shift from ad hoc waste collection to strategical and financial sustainable systems that enable circular economies. To conclude, so we are really seeing ourselves as a lead DFI in waste and circularity, again, working with a lot with other MDBs, and our approach combines investment, mobilization, and advisory. And we see circularity not just as an environmental imperative, but also a powerful driver of growth. And look forward to engaging all. Also, feel free to reach out to me if you have any questions. Thanks.
Thank you very much, Murat. I'm happy to hear about, addressing also the problem of just circular transition. So helping the countries that still are somehow left behind in the ways that they actually managing their waste. And I'm happy that you're here to help them. So we've heard from 3 presenters from the actually public side of the financial sector. Now let's check if the private sector is also all in on circular transition. And we'll start with Leszek Kąsek from ING Bank. Let me share your presentation.
Okay, thank you very much, Hubert. And hello to everyone. We had a global view, a bit of theoretical approach to circularity. I will tell you a few words about Poland. And my points are, okay, because we are still discussing about this issue as a niche. Hubert mentioned about this 2% of sustainable finance no, please stay at the first one.
Okay.
The first one. It is this is about the total sustainable finance. If I'm correct, this 2%. If we look at circular financing related to circularity, we would be talking probably about figures below 1%. Well, with some decimals, really very tiny numbers. And well, the figures which were presented is 5 billion from EIB a year. Sorry, 5 billion in 5 years, so around 1 billion a year, or projects counted in millions of dollars by IFC. Well, this is all very low. So my point is, as I put in the title, as long as we don't have the right economic incentives and secondary markets for raw materials, we cannot somehow force the financing into circular economy. In my view, these price incentives, economic incentives, that they really matter. Nothing else matters in my. I put it a bit provocative here. Next slide, please. As I said, I will tell you a few words about Poland, and if we talk about this transition, well, we have today a discussion on financing, but actually financing is not an issue. And because in general, in Poland, we are talking about the very low investment rates of corporate sector, investment rate in the economy. And if we talk about financial sector, about corporate sector, I will show you later a few slides. The Polish firms, they follow a so-called pecking order when they manage the capital structure. This is not a strategy based on long-term planning, strategic thinking, etc. It's more about financing or using sources of finance which are less risky. So they rely mainly on own capital, own money, later or grant money like EU funds, because usually this is related to low risk. They do not need to care a lot about financial returns. Maybe the social returns are partly to compensate some these projects are not necessarily valid in financial terms. So also here, when we talk about Polish businesses, we have an overrepresentation of small and medium businesses. And our colleague from the Polish Development Bank, BGK, mentioned that many of these support schemes are addressed to this segment. Okay, our point is that actually these kind of instruments, indeed, that may help small businesses, but at the same time, they are hampering, maybe they create a bit of an obstacle for these firms to grow up, to scale up operations, to become, when they're small, to become medium, when they are medium, to become large. And this is this is needed for Polish economy. We need to have productivity improvements, and productivity is higher in bigger firms. I refer to some slides, to some points from the report of European Environmental Agency that, the secondary markets, which are, in my view, very needed, it's urgent, they are not in place, and I will show you which markets are actually operating. I will not use my time for this presentation to present the offer, the commercial offer of the ING. I put these slides on in my presentation. I think the organizers will be able to share it, so you can always review what are the conditions offered by ING Bank Śląski. Next slide, please. Next. I mentioned already about low investment rate, and I also mentioned about that financing is not the problem. And this is a proof. On the right-hand side, you can see the review of obstacles to growth in Polish businesses, and really financing is very, very, very low in this hierarchy. Next slide. I also mentioned that Polish businesses, they use very low, to very low extent the leverage options. Look, only 12% of GDP are the loans of non-financial corporations in Poland, compared to close to 50, around 40 or 30% in many European countries. I mentioned about these, external sources of financing. Something about 25%. Really, it is not the primary source for the Polish businesses are not looking for external funding. For some reason, they prefer to rely on own resources, on EU money, grants, etc. So this very much limits the scope for commercial, offer. We are, because when we talk about circularity, there are environmental, social needs, but in general, we are facing very big challenge to encourage Polish businesses to to take more debt and invest. Next slide. some 10 years ago, deposits and loans in banks were more or less above about 55% of GDP. Look what happened after the pandemic and what we have today. With deposits about 60% of GDP and credits about less than 40%. So this shows that this shows that there's a lot of there's no financing even from this liquidity perspective. There is a whole lot of liquidity. We are missing what we used to say in the jargon, bankable projects. And bankable projects, please remember when you think about commercial banks that there is both they take deposits, and there are guarantees that they will use these deposits in in right applications, I would say. So well, please do not suggest, Hubert, you mentioned that financial sector is reluctant to invest in circularity. This is not true. It's simply maybe the companies are not offering, adequate projects which could be funded by the banks, which have to follow regulatory requirements, which have to take care about the security of deposits. So, well, these two sides have to be taken into account. Please, next slide. Public support. About this, I mentioned already the context of development organizations. Next slide. This is to illustrate indeed the huge differences in productivity between small, medium, and large firms. So please, we need to think when also in sustainable finance, but in general, what to do to help businesses in Poland or other countries to expand, to scale. If you please remember, if a development organization is offering loans on preferential terms or grants to small businesses, not only small or medium businesses, they are somehow encouraged to remain small or medium. They do not. If the criteria are addressed to this type of enterprises, this may limit the scope of their productivity expansion or productivity gains. Next slide. I told you, prices are currently not right. Next slide. When in this study from European Environmental Agency, this was published in 22, out of 8 secondary raw material markets, 3 are not functioning according to the agency. What is working, and this is probably something we are noting in our everyday lives, is aluminium, paper, and glass. These markets are working. How this review was conducted, you need to look at the study. But what is not working is the 5 markets: plastics, wood, bio-waste, construction and demolition waste, and textiles. These markets are not working. You remember, Hubert, a few years ago, we wrote a study about consumer preferences of economic agents. If prices are not in place, these preferences, even though they are okay or they are improving, yesterday I heard that there is the public support for circularity is growing. This is great, but this change in preferences is something. This will not change the market. This will not change the situation. We need adequate pricing, and I find this a very missing part of the whole transition. And this is some sort of a plea to governments, to European Commission, that these markets were not created. Look, if we look at the raw materials, you can have some comparisons with carbon markets in the situation created now with carbon pricing, which are really discouraging the carbon-intensive technologies. We need markets to discourage the overuse of primary resources. These markets are not in place. Next slide. What is this slide is just, maybe you find it as a bit abstract example, but it was my intention is to show you that if prices are in place and the sustainable solution are cheaper than linear ones, or then really this transition happens quickly. Look at China EVs market. China, out of around 17 million cars sold, electric vehicles sold globally, 10 million of them were sold in China. You see that, well, currently about 60% of, which means that 60% of electric vehicles are sold in China. Why? Because they are cheaper. This is the second right-hand side upper. This is BNEF data, Bloomberg New Energy Forum. It's not only cheaper to buy electric vehicles in China, it's also cheaper to maintain them. Look at the residential electricity cost compared to gasoline, or fast public charging compared to gasoline. This is all cheaper. Yeah? So these incentives, we need to use all instruments, policy instruments, interventions to affect the relative prices. The sustainable solutions need to be cheaper. Next slide. Preferences, I mentioned about that also in financial markets. Greenium, you may have heard about this term. That there are a lot of there are investors who prefer to invest, who would like to invest in green, let's call it green solutions. This is not reflected in data. Yeah? This greenium, recent years, does not exist. If you compare sustainable financing operations, transactions to plain vanilla, so-called normal, usual transactions, this greenium does not exist. The investors, this is some sort of, maybe declaration. It's not reflected in data. The greenium is very difficult to detect, both for EU members or non-EU members. Again, this is Bloomberg data. Next slide, please. Okay, here I have put a few slides very quickly, Hubert, that we have, that sustainability is our strategic direction. We are supporting clients with financing. We are also helping them to manage loans, transactions, but also, well, we offer products to other various segments, business banking, also individuals, for energy efficiency, modernization of individual houses. If you are interested, you can. These slides are based on our public information, which is available on our website. Well, the agenda is very large. There's a lot to do. Financial institutions will not make miracles if we do not put the pricing in place. It's not in place today. Yesterday we heard from the video of via online link from the Commissioner for Environment. There are some plans to advance the preparations of secondary markets for raw materials. Let's keep our fingers crossed for that. Thank you for now.
Thank you, Leszek. We will have definitely a lot of topics to discuss after your presentation. Very insightful and really good. I already have a question on mind on what are adequate projects according to me and according to you. So maybe we'll delve down deeper in a second. But now we have our last presenter, Dominik Benedikt from Erste Bank, from Erste Asset Management. And if you could share your presentation, and after that we'll have time for your questions, the audience questions, and our discussion also.
So, good morning from my side as well. Unfortunately, from Vienna, not from Warsaw. I have quite a different position, and I would have almost said sometimes a more unfortunate one than some of my predecessors that you heard from in the initial presentations. That disadvantage is I'm not directly financing projects. I cannot give out loans. I'm in asset management. So the challenge is how to make a difference from for the circular economy as an asset manager. And the good news is we can achieve that. Achieving it should even have become easy right now, because since the EU has given us their EU taxonomy, we do have a rule how to mobilize private capital in financing environmental change. 6 easy targets, easy conditions set out for identifying any opportunities where we can direct capital in order to maybe not give out a direct loan, but still do make a difference. The unfortunate side is it's a little more complicated. Of those 4 examples that you see on this particular slide, a small hydropower plant, our headquarters in Vienna of Erste Group, which are completely covered in photovoltaic panels. None of those 2 actually would be considered green under the EU taxonomy. So you can see, just because you have a solution, it does not mean that the regulation actually counts for it, because the solution needs to be a product. It becomes a product where our bank gives out a loan to finance a photovoltaic panel, in this case, at the childcare facility somewhere not too far away here in Vienna. And there, it would capture it. It doesn't capture even big initiatives such as the Austrian postal system, which completely switched from fossil-fueled delivery trucks in order to make their delivery system more sustainable to electric vehicles, simply because a small detail, for that matter, the tires of those vehicles had one slight flaw, which is 2% too high of rolling resistance. So if we really want to drive solutions, regulation will help us getting there, but it's not the entire answer. It also isn't the answer because as asset management, we've been trying to work in this particular space since 2001, long before any European or other regulation would have come into place to help us. We did not want to wait for it to become just a legal requirement, but it's an idea that we believe in and that we've been believing in for almost a quarter of a century, both as a company and also myself, having worked almost as long in sustainable finance and trying to find always new solutions in making finance work for a more sustainable, a more circular future. Our initial approach to this was in equity markets. The WWF stock environment was our very first sustainable financial product launched. The idea there is investing as a in the equity of environmental solution providers. So essentially small and mid-cap companies, pure plays. We do that in conjunction with the WWF in Austria. And of course, what we try to achieve there, because when you are in secondary market, we will not make a big difference, or at least not an immediate one, is go into those companies right from their IPO whenever we can and stay there as a long-term investor and benefit and accompany them in their growth towards more circularity. With the arrival of green bonds, of impact bonds, in all the shapes and forms that have been there, it might have even made it easier for us to make an even more direct impact in financing and investing in circular projects. But it also made it clear that there's one big challenge. It's not about whether someone tells you something is green, something is circular. Is it actually, or are you buying something completely different? Those windmills that you see there, they are they have been financed by green bonds, by the French utility EDF. The only thing is, do those green bonds really make a difference in making EDF as a company overall more circular, more sustainable, knowing that they have been built in a very public spot. Every Parisian going to southern France for summer vacation will see them from the freeway and from the railway. But what you see behind it is one of the biggest nuclear power plants of EDF. It's what are you financing and what are you buying into? And that's always the big difference. Finding the right themes, finding the right ideas that will kind of deliver on building a more circular economy. The approaches are multiple. You can look at the sharing economy. You can look at product life cycle optimization, waste minimization, circular technologies, or even circular supplies, turning products that may today be a solution to one problem, let's like electric vehicles, for instance, but could become an issue in the long run simply because of what can we do with the batteries, and also how do we get the material for those batteries, for the new ones that we need, not today, but tomorrow. Looking at all those companies that just turn short-term solutions also into long-term endeavors, that's kind of where you find where you can find those investment opportunities as an asset manager. But as I said, always the challenge, avoiding the traps, not going into those companies where it's more of a marketing fad than an actual solution. The problem when you do that, and the problem even when you are in those solutions, is that we're told the other priorities now. Be it from the West, Donald Trump telling us that the solution is to drill, baby drill, in his words, or from the East with Vladimir Putin's war in Ukraine and everything it means to us, where suddenly we're told we're not about circularity anymore. It's all about building tanks. And while this may be an unfortunate reality that defense has become something essential in Europe, my answer to this predicament is still that I want to say it's not a priority anymore, really, isn't it? And I do believe it is, actually. Simply because sustainability, even when you need to defend yourself, it does not go away. Even when you build defense goods, they still do require resources, and you need to look at how to work with those. The same, and it's not just my opinion, because obviously my living depends on sustainable finance staying relevant. It's also the opinion of a wide variety of global leaders interrogated by the World Economic Forum, who of course see all the disruption on a financial, social, and political spectrum that we have right now and how it affects us in the short term. But all of them also do still agree that very much the risks that we're looking at and that we will have as an investor, or just as people doing business, or just living for that matter on this planet, on this continent, we will face the very same issues that we're now told are less relevant, supposedly, due to the short-term to those short-term disruptions. Nevertheless, all of this led to a major backlash that we're facing as asset managers. It's what's called the ESG backlash, and some of it may have come from tendencies that we probably should overcome over the coming years. One is overcomplicating on the regulatory side. The second is under-delivering. That's more those investors who sold kind of green or circular solutions to their clients and did not look at all those little details that I already hinted at to start with, and they sold a hype rather than actual solutions. And that also led them to losing the focus on what makes a material difference and what drives those actual solutions. Because not everything green is a solution for that matter. Look at those open bike rental systems. In the first place, it looks great. The unfortunate thing is, all of those bikes became a big heap of landfill, metal, and rubber over a very short period of time, simply because yes, there was a great idea, but it was not made circular. It was made a very linear process, trying to drive out other actors from the market, each throwing more resources into it without thinking what to do about them in the long term. So the idea is really don't buy the hype, buy the solution and be sure of it. To achieve this, my answer as an asset manager is really don't look at sustainability or circularity superficially, but really make it a key element of your investment process, be it through some in-depth risk analysis, be it through active dialogue with the companies that you're working with, and also by measuring what those companies actually do achieve. Because it's not about it's never about the story. It's about what actual figures, what actual physical difference is being made by the investment, by the company that you are investing in. Engagement. I quickly hinted at it. Engagement is the third key pillar that we have as an investor. And sometimes engagement can really show all the linkage between circularity and other issues, because circularity is more than resources. Since 2016, we've been working with major companies from the chocolate industry on initially two goals. Both of them are social: fighting child labor in the first place, ensuring living wages in the second. All of this turned into a matter of circularity and also resource resilience, so to speak, simply because when you're talking cocoa, you're talking about a very fragile crop with returns and the crops that farmers are able to bring in quickly diminishing now. Over the last few days, you read how very known chocolate bars like Kit Kat, suddenly they do not qualify as chocolate anymore, simply because cocoa has become so scarce on global markets that the content in actual cocoa and in actual chocolate in those bars had to be dialed down so badly that legally speaking, it's just a chocolate flavor something now and not a chocolate bar anymore. The unfortunate thing is normally scarcity means higher prices, means benefits to the farmers. And this, that's not the case. And here the solution, the only solution really that they're looking at is integrating circular practices in their agricultural, in the way they grow those plants. And that's the only way also to create social value in the end for those farmers, and also avoid us having to taste the chocolate that's not chocolate anymore. I've tried one of those optimized Kit Kat bars. They sold them in developing countries many years ago due to the lower purchasing power there. They're awful. So the key here is circularity, because otherwise we lose. For everyone who loves chocolate, there's quite a lot to lose. The cost of all of this, if you don't take in those aspects, is that you will not get out of it. Physics beats politics and markets 10 times out of 10. Gaining, even if when you're in a growing economic system, even when you have financial economic growth, ergodicity, which means that you can repeat in a system like an almost infinite times an operation, and in the end, if there's growth, you will benefit from this growth. You do not have it if you lose circularity, simply because if you lose too many times early on, there are no second chances. If you think about bankruptcy, yes, you may, if you have infinite number of investment ideas, you will in the long term win. But if you go bankrupt before, you're out. Same goes about biodiversity. If you look at biodiversity from a circular, in a circular fashion, you will gain from it. If biodiversity dies out, you will not bring it back. Same, just in markets. And for last but not least, the cost is, if you don't look at those efficiency gains, if you don't look at what you can take from circularity, you overgo an estimated 3.5 trillion annually in efficiency gains in the global economy, 620 billion in Europe, that will miss from your investment case. This is also one of the big drivers why we're told that green just does not make money. Well, our figures show that with all our green strategies, they actually do, and they're very and it the financials of those companies, be it in earnings per share growth, be it in dividends, they do have a very good profile compared to the industry overall. And last but not least, it's also very much, to some extent, even cynical and a cruel opportunity, because the longer now the inaction, the longer people tell us that all of this sustainability, circularity shebang is irrelevant. And that's what we're told in financial markets right now from a very irrational perspective, in my opinion. The higher in the future there will be the urgency for solutions, the higher the price of those solutions, and also the higher the willingness to pay. So in the end, circularity and sustainability is a growth driver. Those companies that have the solutions today and that prepare themselves for it, they will be the ones benefiting. And that's something that we should not forget in financial markets. And the very latest Nobel Prize winner for the Nobel Prize in Economics, Philippe Aghion, he reminds us that in his research, and it's actually a good thing to see this recognized that way. So as an asset manager, in conclusion, what can we do? Be an anchor investor for those driving solutions, be an active investor in speaking out, and last but not least, make all those risks and opportunities tangible, simply because otherwise we are not working with our own money. We're not working in our own books. We need to convince people. And that's really where maybe one of the biggest challenges, but also the biggest chances and opportunities is to favor circular economy as an asset manager. Thank you.
Thank you very much, Dominique. That was a really powerful call to action, I would say. So thank you for that. And we start our panel discussion. I would like to come back to Leszek and the question on what do you actually mean by adequate projects that you don't see right now? Is this about the risk that the current projects are connected with, or they're more cumbersome to actually assess, as Dominic was saying? Is it circular? Is it not circular? How can we check it? Or is it about profitability? Or is it simply there are no such products at all? Could you please unmute yourself?
We saw many examples of projects which are, supported by development organizations. There are, projects support at the global, at the local level. What I meant is were the projects which are valid in commercial terms, which pay off. Well, when you invest, you do it for purpose, in order because you would like to assure a pipeline of earnings in the future and bring you a rate of return. This is the perspective, of commercial institutions, commercial banks, which also need to respect the security of funds, which is deposited, which is given to them. Imagine a situation. Yesterday I've heard that circularity is supported very much by young women, and I said that this kind of support is great, but it's not enough. We need missing these financial incentives or pricing adequate prices so the incentives are driven by economics. Imagine like a young woman on the one hand, and her mother who deposited some of her lifetime earnings in a bank. The daughter says, I have a great project on circularity, and the role of the and imagine whether she would be able to convince her mother to give that this money. So this is the, and I think it would be not an easy sell. And this is the situation of commercial banks when we take money from the depositors and need to intermediate, trying to make a best use of optimal allocation of this money, but we need to take into criteria the potential earnings and risks. So
Yeah, I
think in Poland, in general, my first point was that this propensity to invest, the activity of companies on investment front is very low in general, and it is also low in this area of sustainability or circular economy. So I would first address this general issue, and the second, and then the some barriers, obstacles related to sustainable funding. But I do not see. My point is that financing is not a barrier. Okay, if we have this some sort of just general discussions proposed by Benedict, what is real risk, what is a real danger. You mentioned about bankruptcy, and firms do not exist. In this, if there's a risk of losing a war, that will also not exist. So I would, I was a bit puzzled what you actually meant. This confronting this defense versus sustainability criteria. I think we have now in Europe no choice. We have to invest in defense, but. Well, maybe this is a different discussion.
Okay, first point. I understand from what you're saying that profitability of linear companies or other advantages like risk are still there compared to the circular ones. And the second point is actually for Dominic to make in terms of the connection between the security and all the investment that goes into security right now and the circular economy investment.
Yeah, let me add. I think in the current framework, policies, regulations, it is difficult for sustainable projects to win on circularity, to win with primary materials, the extraction of primary materials. It is for tax reasons, for for treatment of lack of information or distortions.
Okay.
It is more profitable to drill, than to use to give the second life to materials. So what we already produced.
Understood. Dominic, could you add something like that?
So what I was suggesting wasn't let's forget about the defense spending. The unfortunate thing is, of course, ideally, I think we would all prefer to live in a world where this wouldn't be necessary. The reality is, it is necessary. That's so I did not suggest to forget about it. But I think what is missing in this discourse and where it goes wrong is that defense, it's not just about active defense, so to speak, in terms of combat systems, weapons, tanks, etc., fighter airplanes, missiles. Yeah, well, the list could be long. What we should not forget is circularity is very much about resilience as well. It's about avoiding importing economic or other shocks. Essentially, when you're dependent on continuous resource inflow from the outside. For instance, Austria imported 90% of its natural gas from Russia, and from one day to the other, essentially that was not an option anymore. So it had a major breakdown, and all that, for instance, all through Europe for that matter, and also caused in tremendous economic shock and actual economic crisis, and that's something at least right here we're very much struggling with. still are just on the energy side. So if you go from the linear fossil approach to energy, for instance, to a circular one, you're actually insulating yourself from those aspects. From a resource perspective, you're moving away from that renewable energy still is linear input of rare earth from China, and you kind of make all those goods that you have a resource and again go circular, then suddenly again you're protecting your own economy. It's a matter of sovereignty, it's a matter of resilience, and that's why I do believe that exactly this connection that is being made. We do not need sustainability, we don't need circularity anymore, because right now we need to build tanks. That's kind of wrong, and that's where I disagree and believe that now more so than ever, we need to look at circularity, because in Europe, we're living on a continent that is poor in natural resources, and hence very much more dependent on circularity than pretty much maybe anyone else on the planet. And one fun fact that actually was told early in September in Karpacz at the Economic Forum there was from one of the vice president of one of the major Polish utility. And what he told me was that during this energy shock, after the invasion of Ukraine, suddenly he would send his very own trains into the Polish lignite mines, the coal mines, and the trains would come out empty. So when you have the actual shock, even the drilling, even the caving out the resource that you're sitting on suddenly failed. And I was very surprised to hear that. I did not believe, I wouldn't have expected this, but it turned out that was a major issue that he had to deal with during this moment. And again, it comforted me. If you want to have that circularity is another aspect of defense, is another aspect of defending yourself and ensuring that we're not being run over because simply one key supply is being cut off.
Thank you, Dominic. I would like to carry on this train of thought on the aspect, what is linear, what is circular, where there is enough projects for the financial sector to finance, but from a different viewpoint of the actually public sector and a global player, World Bank. So Murat, the question to you is the current relative insignificance of sustainable financing the problem of supply or demand? Do we have enough projects to finance, or is it the question that the financial sector is just reluctant to finance them?
I think, and as in most of the cases, it depends, right, Hubert? I mean, the thing is, in this sector, it's a fragmented sector and not regulated in many of the instances. So it's really hard to find bankable projects with sizable players, with credible off-takers. So these are all the areas that we need to work on, and typically our circular economy projects takes much longer than other, let's say, renewable energy projects or other infrastructure projects. And the reason is really that we need to make the project more creditworthy and work together with the sponsor, with the public parties on different elements of the project structure. So I would say there is a need, there is a demand, but at the end of the day, we all need to come together and make that demand more kind of bankable for also commercial banks and development banks to finance.
Okay, I understand. Now my question to Bartosz, also continuing on this topic, because when you see at the products that we already have in the financial sector for sustainable projects, which with the most popular one being sustainable funds financing tools, credit loans, guarantees. So it sounds terrific at first, right? Cheaper financing costs for businesses, SMEs, etc. But we've seen also from the data that Leszek showed us that the demand for those types of financing products is not so big. So what stands on the way of greater uptake here in Poland and beyond of sustainable financing products?
Yeah, you're right. Preferential loans are widely seen as one of the most attractive sustainable finance tools, and especially because they offer lower costs and they help to unlock investment in green and circular projects. However, the broader uptake is still limited by several factors. Like many companies, especially SMEs, struggle to meet technical eligibility criteria, for example, those that I have listed during the presentation. But there's also lacking of awareness and internal capacity to provide the documents to prove that the investment is run in a more sustainable, circular way. That's why we are making some trainings, webinars, etc., with the GIs, so we can provide suitable information for those companies. But basically, the sustainable finance market is quite changing. For example, most of the EU funds already include environmental components. So, for example, like do not significant harm principles embedded in the programs like National Recovery and Resilience Plan. But I'm very fan of the sustainable finance, and I think it will be growing in future. So looking ahead, I believe that those types of products will represent an increasingly significant share of total types of financing, partially because the expectations rise and the market awareness is growing. So sustainable finance will probably be not just a niche in offering, but this is going to be a mainstream component of banking portfolios. And I fully agree with remarks made by Leszek from ING. One of the challenges we face is the limited appetite among SMEs for investment loans. It's important to remember that when we are introducing additional assessment criteria, our intention is not to impose a new cost related to those obligations. Instead, we are proposing this criteria to aim and support companies in making their financing slightly more sustainable in nature. And I also have to agree with Murat. We are lacking those bankable projects in the financial sector. Therefore, when we see one, we compete within other banks by preferential loans and proposing more incentives.
Okay, understood. So bureaucracy, red tape, showing that you're really circular, that's some kind of a barrier to actually going for the preferential loans. That's understandable. But there's a but. If the financial products for sustainable businesses, financial projects would be so great, so preferential, so good for the company, the barrier would be probably overcome, right? So a question to Pia Nieminen: can financial institution influence the circular transition by providing such conditions for financing that it's just, it would be stupid for the company not to take it? And also, additional question, does the role of public and private financial bodies differ in this aspect?
I think the financial institutions can influence a circular transition. Looking at the EU, already in 2020, the Commission adopted a climate action, circular economy action plan, which had over almost 40 different either legislative or non-legislative initiatives. Now, many of the legislation on batteries, textiles, end of life vehicles, packaging and packaging waste, they have been adopted, and they are now for the member states to implement. So there is really a need for financing, for implementation in member states to reach the targets and legislation which has been agreed. So I think there is a really a momentum now to this transition. What we are doing at the EIB at the moment, we are running a study together with DG Environment in the Commission to look at really the funding gaps in the EU. Unfortunately, this study is not yet available, but it should really help Commission and then others to see what are the funding gaps and where to really to target. What I also want, because secondary raw materials was mentioned here, and indeed the Commission is working in this field, and there is still public consultation open. I think that this may be the last day for it, but the Commission is running a public consultation to hear from the markets what is really needed in order to have a single market for secondary raw materials. So I encourage everybody to have a look at it and give their opinion. And then on the role of public and private institutions, yes, there is a difference. Of course, we are supporting the public policy goals, and the private sector has a bit different approach. But how I see it is that we can often be the catalyst and from the public institutions, creating enabling environment and reduce barriers, and then the private institutions can bring scale and innovation, and especially when commercial models become viable. This is really a complementary role that we can play.
Thank you for that, Pia. Additional small question, just a short answer. From your perspective, European Investment Bank, do you actively, and it's really hard to find projects to finance for you, the sustainable ones, or is it easy and it's just you select the ones that are best, and there's not an question if the supply of existing projects is enough? Because we've heard from the private sector that might be the case, but what is your perspective?
We are demand-driven, so projects come to us, and then, looking at from the financial and technical and legal perspective, then we really see that if they need to be, as mentioned here in the session already, they need to be mature in these ways, so then they can benefit the financing and our support. But as in my presentation, I tried to say that we would like to do more. So that's the thing. I'm sorry, Hooper. I need to leave now. So I thank you all, and I'm happy to stay in touch.
Thank you as well.
Thanks a lot.
Now, question to Dominic, because we've heard, how the financing looks like. What is the financing role in the circular transition? How the financial sector can help in this way? But for you as an asset manager, what is your perspective? What is your experience on your customers and their willingness to actually engage their money, their funds into sustainable projects? Are they happy about it? Are they willing to do so?
Well, you're touching upon like the most important question, so to speak, for us. Since we're not working in our own books, we're working with client money. We need to convince. We need to make it on that level. We need to make a difference between A, institutional clients, and B, retail clients. On the institutional side, we definitely see continued interest for sustainable investment opportunities, simply because those clients, like pension funds, etc., they take some very long-term investment approaches. So they're not being deterred as much by the fact that in recent years, when you looked at 2022, 2021, everything looked like the world was going green, the world was going sustainable. Market valuations for renewable energy companies just went through the roof. And it looked like a trend great trend for us, for sustainability and circularity as an investment theme, so to speak. The unfortunate thing is that a lot of retail money did flow into the markets at this peak. And now the challenge that we're facing is those people took the fall that we had in the markets. simply because of all the ESG backlash that we saw, of all the irrational bashing of investments of those companies that, in my opinion, as I said in my presentation, will provide the solutions tomorrow, and they will make good money providing those solutions, in actually convincing clients that they shouldn't have gone out of the market at the moment there were those major corrections, because in the end, when you that's again ergoticity. If you realize the losses now, getting back gets gets way more difficult, essentially, because you're out of the cash.
Okay, understood.
And so that's, for us, it's really the challenge today, convincing our clients that in the long run, this is still the way to go, even though there might have been a setback on the financial markets that was unjustified. And I think even the loan business, to some extent, that's touches upon what we heard is the appetite for SMEs to go into those projects. Erste Group recently bought a Polish bank. This was like one of the most strategic things that we have been looking for years, coming to Poland, and happy to be there now. What I'm told from our colleagues on the ground in Poland is that there are so many projects out there, actually, with tremendously high return potentials, or even tremendous potential to accessing European funds, European subsidies. Just the knowledge isn't out there. So it's really both on the investment side and on the loan side, really going out to the ground, convincing people and showing them you actually, you have a solution. It's a solution that we want to work with, where we want to work with you on scaling it and making it work, and getting that out.
So I understand that at the time being, you are actually engaging and showing the consumer that the sustainable financing is right. Do you see the pendulum to swing from the moment that it is right now to the one that was in 2020 and 2021, as you told, when the demand for sustainable projects and sustainable financing was the highest?
On the institutional side, definitely. From the perspective of the financial markets, same story there. If you look at the performance of all those renewable energy stocks that got bashed over 2023, 2024, 2025, since the start of the year, they're coming back in a very good fashion. And that's exactly where those clients who at the end of sometime in 2024 got out of the market simply because they said, oh my God, and they forgot about the very simple principle that even what we tell them, this is not a short-term investment. This is something where you should stay in the long term. You have an investment horizon. We as an asset manager are even legally obliged to tell you how many years you should stay in a strategy for it to have a chance to work for you and not turn into a disaster as it has for some. We see that they can come back and the institutions come back. On the retail side, we still definitely have some way to go. In Western Europe, a lot. In CEE, sometimes even more so, but somehow I also deal with the difference that I have the feeling that it's more that in CEE we have this approach of let's see which mistakes they made, the others already made in the years prior, and then once we're sure that we can make it work better, jump in with 2 feet well ahead, and that's what I'm really hoping for.
Thank you. And now, because we are a little bit late, we have just a moment to share your thoughts on the one thing that you would like to see to make sustainable financing go mainstream instead of a niche. We have already heard from you on the problem of bureaucracy, standardization, what is actually a circular endeavor, the aspects of education, all of this. So please share your thoughts in just 2 sentences. Maybe, let's start with Leszek.
Okay, my point is about pricing, putting the right economic incentives. So, as I said, the changing preferences of investors, of consumers, they are great, but sometimes they are only declarations and there is no real action. So I think there will be real action if we have the economic incentives in place.
Thank you for that. Bartosz, let's hear from you.
Yeah, I totally agree. The mixture of the education, awareness raising, providence of sustainable finance, and collaborating with our clients in order to shift actually the investments that are in place at some point into more sustainable, into circular, and also to make some thresholds for banks to avoid financing only linear types of businesses.
Thank you. Murat, what is your idea on the next step for the sustainable finance to go mainstream? Okay, let's hear from Murat later. And Dominique, your turn.
Well, I think it really comes down to showing the potential, educating our clients as an asset manager. It's definitely something that we will be looking forward to, because our objective is that by 2030, 95% of our mutual funds will be sustainable, in at least in the sense of the Sustainable Finance Disclosure Regulation. So
Thank you for that.
We're not going away. And
yeah, that's a positive end of our discussion. Thank you, everybody. Thank you to the audience, the distinguished panelists. I think we could carry on with the discussion a lot more, because there are so many different aspects that we just touched upon a little bit, but there need to be, just delve deeper into it and to think about how to actually make sustainable finance to work in a greater extent than it is right now. So we heard about the supply side, on the demand side, the awareness, the regulations that are currently in place and are not really optimal. Lots of things to do. I think we need to carry on the discussion. We will definitely do that at the Innovo during consecutive circular weeks that we are organizing, and I already invite you to join us to do that. And for today, I thank you very much, and have a great rest of the day.
Thank you very much.
Thank you.
Thank you.
Thank you very much. Pleasure.